there, good afternoon. You're watching Markets at Noon on ET Now. I am Snehi Shah. Let's take a look at what the market is doing right now. Yes, weakness is the name on the street right now. Ever since the get-go, the Nifty has been under pressure and it's recovered slightly from the day's low, no doubt about that. But we're once again below the 23,500 mark on the Nifty, and 0.7% cut is what we're seeing right now. Sensex too, 0.6% lower. It's the broader end of the market that is seeing much steeper cuts because the Nifty mid-cap index is lower by 1.25%, and the Nifty small cap 250 is lower by more than 2%. So that's where the real beating is, because remember, most of these are earnings reactions that we're seeing on the street, and a lot of brokerages downgrades also coming in since morning. If I take a look at what the sectoral mix is looking like right now, you only have Nifty IT that's in the green, up about 1.5%, and some of the top performers from the Nifty IT are names from the mid-cap end. You've got the likes of Coforge, Oracle, Tech Mahindra, Persistent, Emphasis. So it's the mid-cap end of the basket that's doing really well. Large cap also seeing some gains, but the mid-cap IT names are outperforming the larger cap ones. On the flip side, it's PSU banks that are massively under pressure, the most losing sector in trade, led lower by PNB, Bank of India, Canara Bank and Union Bank. So that's the kind of cuts that we're seeing on the PSU banking index, followed by media, defense, metal, auto and realty. But shifting focus then, let's take a look at some of the earnings candidates. And now on the show, we have the management of Jupiter Life that's joining us on board. So we have Dr. Ankit Thakker, the Managing Director and CEO of Jupiter Lifeline Hospitals, joining us on the show. Mr. Thakker, hi, good afternoon, and thanks for your time. Talk to us about what the quarter has looked like for you, and give us a sense of your ARPOB and some other metrics that you've been closely tracking.
Hi, Snehi, good afternoon. So it has been an eventful quarter this year. The last quarter of FY26, we launched our new hospital in Dombivli ahead of schedule. It was slated for a Q1 this year launch, but we were able to finish it before time, and we launched it in February of 26. So a new 500-bed hospital ready and operating now as we speak. Soon after, we also finalized a new land in BKC in Bombay for a new 400-bed hospital. So another strong development coming up there. This will be our 7th hospital, taking us to around 3,000 beds. And apart from that, all the 3 operating hospitals doing well. ARPOBs and margins are pretty much on expected lines.
Okay, so that sounds good. And while we're talking about ARPOB, also help us understand, we've seen quite a sharp jump in ARPOB. I'm looking at your numbers. It's coming at 67,700 rupees. Can you help us understand what's driving this? Is it case mix, payer mix or pricing?
So it's a combination of all of that. Indore still in the maturity stage. So Indore definitely contributes to a higher than normal increase in ARPOB with maturing case mix. And also the pricing gets revised when insurance contracts get revised. So it is a 2-yearly cycle. We've had a few revisions in this year after 2 years. So that has also contributed in rising of ARPOBs.
Okay, and Dr. Thakker, let's also talk about your Dombivli hospital. Currently, only 200 of the 500 beds are operational. If you can help us understand or help us with the ramp-up timeline for the remaining 300 beds, and when do you expect Dombivli to turn EBITDA positive?
The Dombivli, it's a 500-bed facility. We've built the entire superstructure. Currently, the interior and fit-outs are ready for around 300 beds, but we have operationalized, like you said, only 200 because we think it is financially and operationally prudent to not overcapacitate on day one. So once we reach close to 50-60% occupancy of the currently operated beds, we will start ramping up the remaining beds in a phase-wise manner.
Understood. And the phase 1 capex for Dombivli was around 425 crores, if I'm not wrong. Is any further capex planned for phase 2 fit-outs? And if so, then how is that going to be funded?
So currently, no, not immediately. Once we start expanding, then we will need to spend more money. As I said, most of the capex is already front-ended with the whole building, the MEP, but most of the biomedical, everything in place. Now the remaining beds only need small interior fit-out related costs and small machinery related costs. So the pending expansion should not need too much of money. As and when we ramp up, we will do that.
Okay. And on the expansion pipeline, of the three key projects, you've got Pune 2, you've got Mira Bhayandar, and now you've also got a land parcel at BKC, which is expected to be commissioned first. What is the timeline for all three of these projects?
So Pune 2 has committed calendar year 2028. No changes in guidance there. The construction is progressing quite well, and we think we'll commission on schedule. Mira Road, we have finished the architectural drawings and entered the regulatory clearance phase. We think excavation should begin by end of the year. BKC, we've just got the land allotted. It was a MMRDA competitive tender. So now, in the next couple of months, I think we'll finish the regulatory approvals and pre-possession formalities, etc., and then be on our way with that project as well.
Okay, and Dr. Thakker, what I'm trying to understand is also, given the next few years are going to be very growth focused for you in terms of all of these newer projects coming up, can you give us a sense of how margins are going to hold up?
So essentially, growth is you have to keep doing that, and every time a new hospital comes up for a year or two, it will have a negative EBITDA drag on the consolidated numbers. But as more and more hospitals keep maturing, the percentage drag naturally gets diluted. So currently we are on two mature and Indore maturing soon. By the time Dombivli settles down, Pune will come up, then Mira Road. So essentially, the impact on consolidated numbers of each subsequent new hospital will be lower in percentage terms.
Okay, understood. On that note, Dr. Thakker, we'll let you go. Thank you so much for your time and looking forward to all the growth and expansion plans that you have underway for the next few years. Thank you so much.
Thank you, Sneha.
Okay, viewers, on that note, it's time to slip into a very short break. On the other side, we're going to take a snapshot at how the F&O universe is panning out and also interact with the management of eClerx. So stay tuned and we'll be right back.